Welcome to The Explainer. So today we are looking at this absolutely massive, rapid transformation that's happening right in our pockets. We're going to explore the future of cash. And really, we have to ask the big question. Are central bank digital currencies actually about to replace money as we know it? Let's get into it.
I want you to just imagine your favorite coffee shop, say in the year 2026. You get to the counter, but you don't reach for a card, and you definitely don't reach for cash. Instead, your payment goes through instantly using a government-issued digital currency right on your smartphone. Boom! No bills, no coins. And look, I know this sounds like sci-fi, but it's really not. This is literally the new financial plumbing being built as we speak.
Okay, let's dive into this. Because before we can really look ahead, we have to ask ourselves, is cash actually disappearing completely?
Money has always kind of been a shifting technology. If you go back thousands of years, it was barter systems and heavy metal coins. Then in the 20th century, we moved to paper banknotes, debit cards, ATMs. And now, in the 21st century, it's all online banking, smartphones, and digital wallets. The overarching trend here is super clear. Our money is basically becoming invisible. Right at this very second, millions of transactions are settling without a single physical bill ever changing hands.
Now, this whole shift away from paper, it isn't just random. It is driven by what you could call a perfect storm. First off, billions of people now own smartphones for digital payments. Then you have the absolute magic of tap-to-pay contactless tech, and just the massive expansion of global e-commerce. On top of that, governments are heavily moving toward electronic services and welfare. And of course, the COVID-19 pandemic permanently accelerated all of this adoption. So when you put all that together, cash is just, well, it's being entirely outpaced by convenience.
But hey, it's definitely worth remembering that not every digital payment is some crazy, revolutionary new currency. Actually, the vast majority of global capital, like when your salary is electronically deposited into your account, that's just standard bank digital money. So, to put that into perspective, most of the money moving around in today's economy already exists purely as digital bank deposits anyway.
The real revolution, though, that's happening with central bank digital currencies, or what we call CBDCs. And we need to be clear here, these aren't private tech experiments. They are literal digital versions of a country's official currency backed one-to-one by the issuing government. Meaning, one digital dollar equals exactly one physical dollar. It's all about combining that lightning-fast digital speed with absolute government-backed trust and stability.
And this brilliantly illustrates a really crucial divide, the difference between cryptocurrencies and CBDCs. See, cryptocurrencies, like Bitcoin or Ethereum, they're decentralized and, as we all know, highly volatile. They act a lot more like speculative investment assets. But CBDCs, they are entirely centralized, government-issued, and explicitly designed for stable, everyday economic payments. They're the everyday plumbing, not a stock market bet.
And because of that extreme price volatility, most economists agree that crypto won't actually replace traditional money anytime soon. Think about it from a business perspective. Businesses simply hesitate to accept unstable assets that swing wildly in value by the hour. Plus, realistically, governments want to maintain their control over monetary policy, taxes, the whole shebang. So crypto really remains its own distinct asset class, while our traditional national currencies get this major digital upgrade.
Now, this global money race is happening at wildly different speeds depending on where you look. Take China, for example. They are already in advanced testing, with massive digital yuan pilots happening in transit and retail. Then you have India seeing huge adoption with billions of monthly UPI transactions and their own active digital rupee pilots. Over in Europe, the EU is busy preparing a digital euro that prioritizes security and privacy. And then you've got the UK and the US, who are still very much in the researching phase, carefully evaluating the risks and benefits before jumping in.
So, seeing all this rapid global advancement, we have to circle back to the big anxiety a lot of people have. Is cash completely disappearing?
Well, the simple answer is no. So the crucial point is that cash remains entirely essential. It works completely without internet access, it provides immediate payment, and think about emergencies. It functions perfectly fine during natural disasters or power outages. Plus, it's often preferred by elderly populations, and it is absolutely vital for rural communities that might have limited digital infrastructure. Cash is incredibly resilient.
Having said that, the advantages of digital currencies are just impossible to ignore. We are talking about faster, practically instant transaction settlements and significantly lower payment processing costs across the board. It also opens the door for much better financial inclusion for unbanked individuals. And on a systemic level, it drastically reduces counterfeiting risks and allows for incredibly efficient emergency aid and government payments.
But of course, every major upgrade comes with challenges and risks that have to be navigated. There are very valid privacy concerns over excessive data collection by governments and corporations. We also face constant, evolving cybersecurity threats. Then there's the very real risk of digital exclusion for anyone without a smartphone or reliable internet. And, let's be honest, total reliance on digital means you're vulnerable to power outages or network failures. Balancing all of this innovation with privacy and security is without a doubt the policy challenge of our time.
So what should we actually expect by, say, 2035? Well, experts predict that digital wallets are going to become the primary payment method globally. We'll likely see CBDCs expand across major global economies, which means faster and cheaper cross-border payments. Literally almost like sending a text message. AI is going to step up to seriously improve fraud detection. And while cash definitely won't die, its usage will absolutely continue declining, especially in highly connected urban areas.
Basically, the future isn't some forced, fully cashless dystopia. It is a mixed financial ecosystem where cash, bank accounts, mobile payments, and digital currencies all seamlessly coexist. We're getting the expanded efficiency of digital tech, but keeping the undeniable resilience of physical money completely intact. It's about giving people more choices, not fewer.
The concept of money is changing faster right now than at any point in history. And the infrastructure we are building today, it's going to dictate the global economy for decades to come. Which leaves one really fascinating question for you the next time you step up to a checkout counter.